Ackerman Resources Limited is a gold exploration company with significant projects in British Columbia, Saskatchewan, and the Yukon. Trading on the TSX Venture Exchange, symbol ABN, and the pink symbol ABN-AF. Surrounded by world-class gold deposits and mines, Ackerman's 23,000 hectares Forest Kerr Gold Project is located in the heart of the Golden Triangle in northwestern BC. For more information, visit us at ackermanresources.com.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Rick Ackerman, editor of the newsletter Rick's Picks, his website, rickackerman.com. He's speaking to us from Colorado. Welcome back to the show, Rick.
Thanks for inviting me on, Jim.
We're just taking a look at the equity markets and how money still seems to be pouring into them. And you said this is really great insanity.
Well, it really is. You know, I'm struck by, of course, we're in earnings reporting season here for Q1, and we get these reports that are steeped in minutia. You know, the analysts would presume to know so much about how these companies are doing that they deign to forecast the earnings within a penny or two. And of course, while we're busy splitting hairs about earnings, we know that they have nothing to do with this bull market. You know, it's being fed by an enormous torrent of funny money. This is globally. And we've got all these companies essentially with huge hordes of cash going out and borrowing more simply because they can, and they can do it for next to nothing, so that they can buy back their own shares and push their earnings multiples up artificially. You know, we achieve absolutely no economic growth when a company shrinks its float, but it has the effect of, pushing the earnings per share higher. And of course that justifies higher share prices, which beget higher bonuses for the executives, and it begets the exercise of more stock options. So it seems like a kind of perpetual motion machine where it's win, 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 win. Everybody wins, but we know that that as the stock market ascends, and especially as it hovers near record highs with this recession in housing and autos brewing, and statistically recession in the economy brewing, and it's all pretty crazy.
Wasn't there a time it was illegal for companies to buy up their own shares because it distorted the market?
Geez, I can't remember those days. I mean, I've been around. I can remember going up to my father's stockbroker's office when I was 16. That would have been about 1965, and I don't remember such a rule. But we know that whatever the rules are, they've always favored the self-aggrandizement of the investment community. You know, the rules are kind of created to not necessarily to be broken, but to sanction whatever the prevailing craziness is at the time.
Well, I think that rule might have been in place up until the 70s, so it might not stick out in most people's minds. What about Donald Trump's thing says, I'm thinking about breaking up the big banks? Are people worried about that? Or should they be worried?
Well, I think by now, with Trump 100 days plus into his administration, we would have noticed that for whatever he's saying, not too terribly much is happening. So I don't think I would either fear or celebrate anything that he's got to say with respect to economic policy, trade policy, geopolitical policy, whatever.
Somebody I heard has already dubbed him the say anything, do nothing president.
Well, but he's a politician, and as far as the say anything part of it, he's no different from the rest of them. But I think that in this instance, we had come to expect a little bit more. You know, he was definitely he was something new, and of course, we see the same political obstacles. Even as far as his own philosophy was concerned, it seems like he's canned most of the scrappers in his own administration. So it seems like he's sort of hunkering down for the status quo.
What about, I also heard Trump might buy up IHOP because he waffles so much.
Well, he's going to corner the market on comfort food there. I understand that, in all of the finer restaurants that he owns, that meatloaf is an item on the menu. So he likes that comfort food. And, that's one claim I would take seriously, that he's going to buy up IHOP, if not for the waffling side of his personality, just for something good to eat that's quick.
What should investors be doing with their money? Because it seems the equity markets have caught fire for no particular reason.
Well, they've caught fire because, it's habitual now. All this money is getting thrown at the market, and we've got some odd adjustments yet to come on the basis of how much money is getting thrown by the little guy at some of these ETFs. So, but the general rule of thumb right now is, I think you should just hasten to put your money in all things that seem to be yielding nothing. You want to go for the certainly long-term paper U.S. Treasuries, because I think there's somewhere down the road a flight to quality, plus an unwind of this crackpot idea that we were going to have inflation. That's not going to happen. Instead, we're going to have recession, and that's yet to be discounted in the long bond.
We'll have more with Rick Ackerman right after the break.
I'm Larry Ray, President and CEO of American Manganese, Inc., listed on the TSX Venture, ticker symbol AMY, A-M-Y, with proprietary patents in the U.S., China, and South Africa. Our focus is on recycling lithium-ion batteries for electric vehicles. China recently legislated the responsibility for recycling onto their electric vehicle manufacturers and importers. For more information, please visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
Gem International is a new diamond explorer in the richest diamond producing country in Africa, located next to the fourth largest producing diamond mine in the world. International Spotlight is on an 1109 carat diamond recently discovered in Africa by a fellow Canadian junior with a proven operator and finance team. Gem International trades on the TSX Venture Exchange, symbol GI. Visit us at gemdiamondmining.com.
Welcome back. We're speaking with Rick Ackerman. Rick, the price of crude oil keeps slipping. Is going to fall down to the 30s, 20s again like it did last time?
Yeah, I don't think there's a bottom for crude. And, one thing we've talked about in the past is just the phoniness of the story that was driving oil up into the 50s. It was always a supply-side story. In other words, the bull market in crude seemed to be happening because there was this threat of a supply curtailment from every source, ranging from Venezuela, crude to natural gas from Iran, and it just never happened. The Saudis never got all the sellers to hang together. And of course, the supply of oil is fungible. If it doesn't come from one place, it will come from another. And if any large supplier like Iran or Venezuela breaks ranks, then the cartel really doesn't exist. So if the skew up into the 50s for crude had been the real deal, it would have been driven by a demand side story, and probably the best one I could think of would be China at the margin, the biggest energy buyer in the world, is starting to cook. The economy is going great guns. It's heating up. That would have been the story you'd want to see if you were an oil bull looking out over the long haul.
Well, apparently, while auto sales in North America are cooling off, in Asia, they're still booming. People in China and India can't wait to join the middle class rush hour traffic jam.
Yeah, there's I guess a burgeoning market to the extent that you've got this emerging middle class in places that it didn't exist 15 years ago. But we're worried about the U.S. Auto manufacturing business catching the sniffles here. And of course, they're coming off a really big year. And the same thing that's impacting the housing market very significantly at this point has crimped auto sales as well, and most crucially on the leasing side, because leases, like mortgages, are way. They've provided a way for people to drive a lot more car than they can afford. You know, with the auto lease, you never really pay for the car, and you know, you just turn it over in 3 years, and the payments wind up being relatively steep. You know, as far as wear and tear and what you'd pay per mile, but it still puts people in cars. You know, if your budget will allow you to buy a $30,000 or $35,000 car, the lease will allow you to buy a $50,000 to $60,000 car. So you know, a little skew, the same upward skew that has hit mortgage rates to the tune of about 90 basis points, has also significantly affected the leasing market, and I think we're just beginning to see the downside of it now.
Well, I know local car dealers here are offering all kinds of cash back deals and so on.
Well, they're going to have to, just to sustain sales, and of course the more of these cars that come off leases and go into the used car market, you're going to kill that market as well. But there's a general dampening of the auto market right now. And again, it's just sort of nutty to have such a key component of the U.S. economy headed into something like a perfect storm, with the stock market trading just, you know, the Dow an inch off all-time highs.
We'll have more with Rick Ackerman right after this.
Lotus Ventures Inc. is a BC-based medical marijuana company poised to launch into the rapidly evolving cannabis sector. Lotus is in the final review stage of the Health Canada approvals to become a licensed producer, having arranged facility financing of up to $12 million, plus building permits for its prototype indoor production facility. Shares trade under the symbol J on the Canadian Securities Exchange. Visit our website at lotusventures.ca.
Keep informed. Receive our weekly recap of thought-provoking articles, podcasts, and radio delivered to your inbox for free. Sign up for the HowStreet.com weekly recap on our homepage, HowStreet.com. Welcome back. We're chatting with Rick Ackerman. Apart from the statements made by Donald Trump that people are taking less seriously every day, are there any signs that the U.S. is truly going to negotiate its way into a better economy?
Well, I think that even though his heart may be in this idea of negotiating better trade deals, in the deflationary environment that exists globally in manufacturing, you know, you're up against some very serious headwinds. So I think we can talk seriously with Mexico about some deals, and even with Canada and some of the other countries the U.S. does business with. But you know, you're going to be pushing up against that threshold of not trade wars necessarily, but all those countries out there are looking to produce and sell as cheaply as they can.
Also, something I haven't heard a lot about lately is 3D printing and how it was supposed to change everything. Wouldn't 3D printing bring more manufacturing back to the locals? But I mean, you don't need a factory. The factory comes to you.
Well, looking like way down the road, I can't conceive of anything more deflationary than 3D printers. You know, ultimately, you know, we'll have a store of raw materials in our homes, and we can 3D print pretty much anything we need. And you know, that would even eliminate most of the UPS trucks that deliver goods from Amazon and elsewhere. But also I get a magazine from my college, University of Virginia, and they had a great article on 3D printing as applied to certain biomedical, biotech areas. And the capabilities there are really revolutionary, and I see 3D printing well down the road as one of those world-shaking technologies that could change everything.
3D print yourself a new kidney or lung.
Exactly.
Well, there's also a new medical procedure or a thing they plan to do for paramedics, and it's called Save the Head. Where Save the Head. because everything else can be reproduced or fixed up. You have all the time in the world to plug the leaks later. Just make sure the head survives, and you can work on the rest of the body at your leisure.
Right, and we've had some science fiction films that emphasize that point. You know, they showed the heads connected with all the neural tentacles to some fluid filled with brain nourishment, and I think the head is probably going to be the most difficult part of the puzzle for these 3D printers.
But apart from that, there you go. Also, I just saw a thing about artificial intelligence affecting the food industry. Right now, food prices are very slow to work through the system, but now they can forecast the weather, find out that cabbages are going to be worth $3 more in 5 weeks because there's a potential flood somewhere. And you could actually see daily, hourly price fluctuations in your grocery store as they take into account this micromanagement of food.
Well, 3D printers aside, I'm not much of a futurist. You know, I go back to these rotogravure panels that were done by a professor named Thelston Spillhouse in the 50s. The feature was called Closer Than You'd Think, and it was hovercrafts, you know, flying cars and things like that. But what brings me back down to earth is just something as simple as voice recognition software. It's so bad that I'm thinking all of the talk about artificial intelligence is really greatly overdone.
Of course, until a robot takes over your job.
Well, and I'm skeptical that the robot's going to do a better job than the worker who's sort of got to that Peter Principle plateau of, you know, working his way up the ladder to some job that he can't do very well. But I suppose I can be replaced by a robot too. But the robot thing is a bit overdone too. They're good at welding parts and auto manufacturing and things like that. But AI hasn't really impressed me that much so far.
And once we have all these super efficient robots doing everything, who's going to buy these products?
Well, I think Bill Gates had a good idea there. It sounded kind of crazy about taxing robots because they're going to put people out of work, and the tax would help to feed those out-of-work people. But you know, robotics, even to the extent that we've instituted it in the manufacturing chain so far, and also in retail, is deflationary. It displaces a lot of jobs, and you know, over hundreds of years, you could say, well, whenever any of these revolutionary new technologies came along, there were always doomsdayers who said, you know, this is going to kill the economy, it's going to kill jobs, but ultimately, the technologies wound up creating more jobs than they destroyed. But I think that we are in a historical period where that's not going to hold true. That it is in all practical ways a job killer. We're in a transitional phase right now where the jobs displaced by some of these revolutionary money-saving technologies are really going to, you know, it's going to do a lot of damage to the economy. And yes, over the long haul, it's creative destruction. But the transitional phase to when we get to more jobs is it's going to be generations, I think, rather than decades.
The woman who owns the biggest construction firm in England says she plans to build high-rises using nothing but robots.
And that's all well and good, you know. You have to ask yourself who's going to live in them and how will they afford to pay for them. And of course, the capital costs, even when you've got robots building these dwellings, will be high enough that somebody will have to bear the cost, and it will be very significant.
Rick, always a pleasure talking to you.
Likewise, Jim.
My guest has been Rick Ackerman, editor of the newsletter Rick's Picks, his website, rickackerman.com. You're listening to HowStreet.com radio. Find us on Twitter at TalkDigitalNet, Our YouTube channel is Talk Digital Network. Questions for the show or for our guests can be sent to info@howstreet.com. I'm Jim Goddard. Thanks for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.